Hey, good morning, traders. This is Trader Tim from E-mini Mind, and we're doing a Friday morning trade recap for the week. Today is September 9th, 2016, and we've finally seen what looks like the first of breakout of our range. We have one more low down here at 21.4150s to break. Currently at 21.4475s is the low for the morning. As I record this, the market's still open, so we may be able to pierce that. That being said, it'll be interesting to see, and this is trading hours only, keep in mind, but it'll be interesting to see if we break this swing low back here, if we can continue trending lower, or if the bulls will see that as a buying opportunity and step in and push the market higher. We've got a number of things going on in the next couple of weeks in terms of news, the most important being the FOMC meeting announcement on the 21st. A little bit later in the month, this September, and typically around that time is when we see the great, good fall trading opportunities come back into the markets. So a lot of times in the summer, you'll get this kind of stagnant price movement, and then in the fall, things resume, and we develop a trend that will typically carry into the Thanksgiving, Christmas time. And so, being that we're at the top of this 2175, the target of the large 50% retracement down below us, the next thing I would look for is a pullback to the next daily level, which would be down here at 86s, kind of at the recent highs that we had. And we'll see if today's gap down turns into anything substantial, or if we just kind of start to round out and move back up into this range once again. But let's dive in and talk about a few trade setups from the week. We did a live trading on Thursday this week just because of the Labor Day holiday. I didn't expect a ton to occur on Tuesday, so I wanted to kind of recap some of the things that we saw this week, and I'll just start with Wednesday just because we had a nice opportunity for a low of the high bar break up at highs, and typically, when I'm looking for the low of the high bar or the high of the low bar breakouts, if you will, the momentum plays, the momentum is typically at a changing point or an inflection point where we might have been going in one direction and the momentum is now changing and going in another direction. So when we break into a new high and then sell off, or as I was just talking about on the daily chart, if we break a swing low and then start to rally, those are very good opportunities to get into counter trend trades or reversal plays. And the way you can do that is with using the low of the high bar, high of the low bar break, where I'm just identifying the highest bar in the rally and then in this case, getting short below the low of that bar. And so on Wednesday morning, we opened up and started trending higher. And as soon as we made that new high, the market started to sell off, and we had a big bearish candle. And so just by putting a sell stop below lows, I was able to get into the trend at a pretty early point in the move, and then ride that trend lower, keeping in mind that we don't trail our stop on inside bars. So these 4 bars here are all inside this big body candle. And so I like to just leave my stop alone, let the inside bars kind of let the market pause, and then once the market starts selling off again, then moving my stop down. And so usually you can get another leg or two out of the move, in which case, this move in particular getting taken out down here. And just by putting my stop above the high of each candle, that's how I can manage the trade as we go down. And then on Thursday, started off a little bit seeing some potential with the gap down, but it didn't really materialize into much. And the reason being is that the bulls and the bears were very balanced. And if we were to look at the breadth again in the market internals, you would see that we were at 1-to-1. We were at a very equilibrium point, if you will. So we started off the day looking for a continuation of the gap down, and we kind of got that, but it was pretty messy and we had a lot of back and forth, so it really didn't materialize into anything substantial. And you'll notice that down here we had a lot of tails. So as soon as the market started to move lower, the bulls stepped in and pushed the market back higher, and then pushed the market back higher. One important thing when you're looking at the 512 tick chart for retracements is to really look for swing highs and lows to be broken. And so there were a couple of smaller 512 setups that were a little bit dirty, meaning they didn't just trade to the 50 in reverse. We had one in the middle of the morning after the markets settled out from the first 15 minutes or so. The markets markets opened right about here, 8:30 Central Time, and when we first open, I kind of like things to settle out just a bit before the open. I'm looking for, are there any gaps above or below us, and is there an opportunity to get into a gap fill, if you will. So if pre-market we're below yesterday's close, I'll be looking for an opportunity to get into a long to take us up into yesterday's close, which is what we saw on Thursday. But there weren't really any good opportunities pre-market for that. So after the first 5-minute bar settled out, I'll start to identify highs and lows. And right off the open, it was choppy, kind of back and forth, just moving sideways. And then we started to develop a little bit of a pattern. We put in a low, and then we put in a lower high, and then we put in a lower low. And so that gives us an opportunity to pull up a short. And you'll notice that we traded up to the 50, hovered around the 50, traded through the 61.8. Now this range here, we're at about a 78.50, and the 61.8 is at about a 79.25. So it's a pretty tight window. I mean, the target, the 78.50 down to the negative 23% target, was only a couple of points down here at 75.50s. But we did have a break of the swing low back here, which is what gives us the opportunity to draw up the 50% retracement. So the swing low broke. We can pull from the most recent high to low. You can pull from, a previous high or low. You could pull from, so let's say, the open high and down, and that gives you a little bit bigger range in terms of entry to target. But sometimes you don't always get filled. So sometimes, if you go too big with your anchor, if you pull too far back, the market will reverse before that. So just something to keep in mind, especially when you're on the 512. I'm okay with pulling from the most recent anchor, just because we're on such a small time frame, if you will. So once we traded that entry down to the negative 23% target, then the market came back up, and we broke the swing high by one tick. And that was enough for us to pull from the low of the morning, like this, up to that high, and come down at the negative 23% target, a little bit cleaner than the previous one. And then we had a quick spike up and even through the negative 23% target. And then from there, we were getting into about the 9 o'clock hour, and we went into a trading hours only, meaning the low to the high of the morning. We traded to the tick and started to run, and then just kind of pittered out through the lunchtime session, and that was about the time that I closed out for the morning. And so you can see that once we traded down at the 50, started moving higher, we kind of went up in a couple of legs, didn't quite make it all the way to the negative 23% target, came down, retested, had another bounce, and just kind of moved sideways. So I don't like to get too crazy when we draw a 50% retracement and we don't get all the way to the target. I don't like to necessarily come in here and draw a smaller one that is kind of on its way to the negative 23% target. I like to just let my initial drawing either get to the target or fail before drawing a new one, because in today's example or this example of Thursday is pretty choppy, and I would argue a fairly crummy day for trading. So in really good days, you'll see the market go entry to target, pull back to the next 50%, go up to the next target, and so those are the scenarios that I like to be really active on. So if I drop at 50% and we don't quite make it to the target, and then we don't break the 61.8, there's really nothing to do in the middle, and you can see just the chop sideways movement. And then today brought us to the gap down. So the first thing I like to do is look for a continuation of that gap down in the morning and on the 5-minute chart. And we had a little bit of that this morning, but it was fairly difficult. Come on. Fairly difficult to stay in if you were just trailing each candle's high, because we had a little bit of a bounce in here, and then another leg lower, and then a little rally, and then another leg lower. So if you were to just trail swing highs, it'd be no problem. The market kind of came down a couple ticks, and then had a slight reprieve or a slight bounce, and then moved down another 10-15 minutes, and then hit a slight bounce. And so just by trailing swing highs, it would have been easy to stay in. I was not able to hold on for this move just because with the markets being so choppy back and forth, I didn't want to, I was under the bias this morning that if we were going to gap down and move, I'd want to be in and out rather quickly, just because the markets, as of late, have been not showing that follow through. So I didn't want to just sit here on a Friday with a wide open stop and let the market just kind of chop around and do nothing. And so sometimes they move super tight and clean. Sometimes they're a little bit choppy, but today's price action is actually pretty good. I'm impressed with the way things have been starting to shape up, and if we can continue in this kind of market environment where you have more, cleaner 512 tick chart where we have a string of red bars and a string of green bars, meaning that the trend is at least has some momentum and some follow through, then we can really start to gather momentum in our trading with good quality trade setups and not just getting chopped up. Because a lot of what we've been seeing, as I was talking about inside bars on the 5-minute, like yesterday, most of the day on Thursday here was an inside day in the morning. And a lot of these days that we've been having up here, very tight ranges inside the previous day, just sitting on that 2175. So today is really the first day where we've moved out away from the 2175. So next week, looking for us to either break the swing low if we're not able to do that today, or for the market to have shaken out enough stops and bulls with today's gap down that bigger, newer players are able to come in and see it as a buying opportunity and then push the market through this resistance level. But sitting up here for so long, I'm not super hopeful, or I'm not expecting that the market will necessarily come back up and blow right through. But we can either break the swing low or start moving back into this gap fill area and maybe come back up to the 2175 and make another leg lower. Because if you look at the cluster of this chart, you can kind of see a widening formation happening almost like this, and then you could just draw a horizontal top, if you will. But we're having lower lows occurring, and we've created this ceiling, so there is definitely some room for us to maybe bounce back up to resistance and then get slammed down and work our way down to these previous highs at 2086 area. So I hope you all have a great weekend, and we will talk to you next week. Thanks, everyone.